Last couple three here. Fico Corporation. Guys, what do they even do? They give us our credit scores? Does that really, is that really like, does that matter? Does that matter, guys? Wow, look at this. It's like the companies that like don't really do as much are the ones that seem to be making all the gains back. You know, I don't know. FICO. Wow, from 181, low of 179. It's at $400 right now. Oh my god. Yes, the everybody uses FICO scores. Everyone knows what a FICO score is. If you don't have a credit score, who are you in this world? I mean, I know who you might be, but you know, who are you to these big banks? Who are you to anybody who has a loan? I know that the world relies on this FICO thing, guys, but this couldn't look any more toppy to me. It couldn't look any more toppy to me. And I know that I'm like, I can be like way too much of a bear sometimes. But guys, this just looks fake. I mean, this does not look real. You know, guys, I'm a big proponent for blockchain, you know, decentralized applications, removing a lot of the middlemen that exist in our society, such as MasterCard, FICO, you know, these insurance guys. Would I bet on them? Is it in my interest to bet on them doing well? No. I don't appreciate them, and I agree that they may have been necessary at once, but there are things out there now that are pretty much making these types of things obsolete at this point. Is there something to compete with FICO at the moment? I'm not exactly sure, but I wouldn't be surprised to know that there's something right around the corner, or there's something in development currently that is a competitor to FICO, and you know, if it has the right network effect, it could dethrone something as universal as FICO. Will FICO persist for the next, you know, 5 years? I don't know, guys. There's a lot of stuff changing right now. For the next year, yeah, totally. I believe FICO will be around. You know, it's what does it look like on the monthly? It looks like it looks like on the MACD, it's bouncing off the signal line. The signal line is bouncing off the moving average. You know what I mean? Stuff like this, guys, it's just so unbelievable to me. I feel like a lot of these companies are so detached, and they're so entrenched in everything. You know, am I rooting for these companies? No. Would I like to have a stock portfolio that consists of these companies? No, not really. Let's take a look at the numbers here, guys. Let's take a look at this FICO. I hope they have great numbers. I hope they're better than MasterCard's. All right. Currently, Yahoo telling me it's overvalued. All right, Yahoo. Holy jeez! Wow, when you really zoom out on this thing, that's insane. Ever since 2008, this thing went bonkers, man. Went bonkers after 2008. Oh yeah, I remember that year. Just graduated. All right. So, guys, I think that you know, the price to earnings, it's a 55. That's pretty decent for this type of financial type of thing. Let's look at the statistics. Price to book ratio, 56. It's not exactly great. They have a decent profit margin, a decent operating margin. Return on equity, 100.49%, huh? Right. Well, I guess once you figure out the algorithm, you just kind of let it do its thing. Let's see. Quarterly earnings growth 74.6. That's insane. That's insane, guys. 87% held by institutions, 2.17 held by insiders. So that leaves the rest up to retail trade. All right, guys. They have total debt of 1.05 billion, total cash of 108 million. Debt to equity, that looks terrible. The book value per share is pretty good. That's actually kind of not that bad actually. Guys, would I add this? Would I add this? No, guys, I wouldn't add this. It doesn't seem like a growth stock. It doesn't seem like it's growing. I mean, you gotta think of it this way, guys. You want to grab something that kind of has like it's not known by everyone, not already out in the open. FICO's already in tons of people's conscious. Like, let's just move on, guys. Let's move on. All right, I like this one. I like Chipotle. I wanted to be in Chipotle for the longest time. Back when I had no money, and dude, I should have gotten into it anyway because it's like it got so far away from me, and now it's like, do I even really want to buy this anymore? It's so overblown. Wow. Alright, guys, so on the weekly, looks like it might be turning up. It looks like it might want to hang out. It might be like trying to hang out in this like bullish control zone area off the stochastics. On the weekly, wow. This is really far away on the MACD, guys. This line's gotten really far away. I usually start looking for it to turn back around then. Am I still in hiking and sheet candles, guys? I gotta remember to throw this thing back on the reg more often. Let's take a look at the daily. What's going on over here with these candles, guys? Look. Kind of like gapped up, dumped. Weird trading action here, but I mean, all of these moving averages are up. If this continues to go up, that would be nice. I'm not exactly seeing anything special for Chipotle right now. Could bounce off that, Let's look at the 4 hour, guys. I think this might have some room to run tomorrow, guys. Let's take a look at the numbers here. Alright, so we've got a price to earnings ratio of 86. That's terrible. For a restaurant, I mean, we just looked at Darden Brands, which is literally, a whole lot more pervasive than Chipotle is. However, Chipotle does have the fact that it is a grab-and-go restaurant. People don't usually sit down in the restaurant. Most of Darden's brands do include sit-down restaurants, which I know is being affected by the current state of affairs. Let's look at these numbers here. Alright guys, we got the price to earnings ratio at 83. We already went over that. Price to book ratio of 16. That's not bad. Got their small operating and profit margins. That's normal for restaurants, guys. That's a pretty decent return on equity right there. Alright, so let's take a look at quarterly earnings growth. Went down. That might be a good thing. You might be able to pick it up on a cheaper price. Debt to equity, 176, guys. 176. It's got total cash of 881 million. Total debt of 2.94 billion. Yes, that is a lot. Book to value. Alright, book value per share is at 60. Okay. Alright. Let's see. 1.61% held by insiders. 92.16% held by institutions. Okay, so that's pretty. It's not bad. Let's take a look at what these insiders are doing, guys. Let's take a look at Finn, and we're gonna type in Cmg. Let's see what's going on over here. Oops, my bad. Oh, alright guys, looks like there's been some sales. Baldacci Alberts liquidating. Just recently, guys. I don't know. This is not looking good, guys. Alright guys, I'm just gonna say, let's move on to the next one. Paycom software. Now, when I heard about Paycom software, I didn't really know what to think. They specialize in human capital management. So basically, employees, all their information, keeping all their settings, like their preferences and stuff like that in the company, tracking like what they do in the company, where they work, their positions, their story in the company, stuff like that. So let's take a look at this right here. Okay, this looks a little more normal, guys. This looks a little more normal. I don't like it when I see stuff just go up in a straight line. Okay, this looks a little more normal, even though it goes up in a straight line, Wow, it really is a straight line, isn't it? Alright, well, I mean, that's just since 2017. Let's take a look at the daily here. Looks like this is a solid company, guys. This thing's like basically a 45-degree angle from 35-degree angle. Looks like it's not letting up. It doubled. It had a 50% drop almost, and it just straight up, literally recovered here. MACD looks like it's crossing over on the daily. On the weekly, looks like it's got some more room to run here. Well, take a look at this monthly chart, guys. That's pretty funny. Okay, so stochastics look like they're bouncing on the daily. Weekly look like they're turning back over. On the 4-hour, it looks like it's bouncing, and on the monthly, it looks like it's bouncing. Guys, I really don't know what to say. Let's take a look at the financials here. Paycom software clocking in at a 93.02 price to earnings ratio. I'm not going to say anything about that. This thing tells us it's overvalued. I probably agree with that. I pretty much agree that most things are overvalued at this point, guys. I'm basically shorting the market right now. I mean, hey, you never know, all this funny money the Fed is injecting into this like corporate bond sector here. You know, it might be time to bet on the companies that service the bigger companies, like such as insurance, FICO, MasterCard, whatever this company is. You know, Fed is pumping out money through the bond market right now. They're literally buying individual bonds right now. They're not buying ETFs of bonds anymore. They're buying individual bonds now. So is that a cause for concern? I would think that's concerning. If you don't know what bonds are, guys, let me tell you what bonds are real quick. A bond is a debt instrument. So, for example, when I say that I'm buying bonds, what I'm really doing is I'm telling you that I'm lending someone money and they're giving me a receipt that says that they owe me and whatever amount per interest that is. It would basically be the same thing as if you walked into a bank and you said, "Hi, I'm selling." You know, if I walked into a bank and I said, "I'm selling Martin bonds. I'm selling Martin bonds. Here, take one. You want to buy it?" And it basically says, you know, one Martin bond, you know, for $50, and you get $1 a month extra on your money. And so if someone wants that cash revenue stream, you know, maybe they don't know what to do with the $50 themselves. They have nothing to do with the money. They don't need the money. Maybe they think that it's better for them to get $1 a month from me for the next 50 months, the next 50 plus months. Because you got to remember, guys, a lot of these companies, they're not actually paying back the full amount of the debt that they issue. What they're doing is they're just issuing the bonds, getting the money, and then they're just paying interest on the bond every time. And then when the bond comes due, all they do is they finance it again. They sell more bonds so that they can pay back the money for the last bond. So they roll over the bond. A lot of these companies are basically never going to pay back. They're just going to pay back just the interest perpetually, most likely. I mean, the federal government's basically giving them the money. You know, at like what's the interest rate right now? Like 0%. You know, you really got to think about this stuff. It's like if I went to go borrow money, you know, I would be hit with like. I mean, you can tell, guys. You can tell like what we have to go through. People like me and you know, the normal people. I'm not like a rich dude or anything like that. I'm, you know, I'm better off than a lot of people. Yeah, but I'm not exact. I don't have like, you know, I'm not driving like a sports car or anything like that. I mean, I'm not driving anything right now, but. You know, us normal guys, we have to pay. I mean, if you're not getting a lot of people, let's just say like the majority of people, they can't get a loan at the bank. They don't have any collateral. Okay, so where do they go? Credit cards. How much do credit cards cost? 20%, 20%, 29% interest rates. And then you have the federal government just loaning out money to all these big corporations for like almost 0%. That's what they're doing when they say that they're buying bonds. Guys, enough ranting. Let's move on here. You know, they have a nice return on equity. They have a decent operating and profit margin here. 77% held by institutions, 16% held by insiders. Guys, 16% held by insiders. That's fucking great. So, I mean, that sounds good to me, guys. You know, the more shares that are held by insiders, the higher I believe that a company, um, the higher morale that I believe a company has, and the more employee belief the company has, I'm all for that, guys. When I see that a company has 16% held by insiders, you know, let's just do this right now. 77 plus 16. That's let's see, that's 83, 93. Okay, so about 6 to 7% is held by retail. This looks interesting, guys. This looks interesting. Let's take a look at what the insider. All right, guys. So, ACOM software. Here we are. Looks like this Chad guy. He's got most of the shares here. Wow, guys, there's been a lot of selling lately. There's been an incredible amount of selling. I mean, that doesn't look good to me, guys. Doesn't look good to me. That's a lot of selling, guys. This guy literally just exited his entire position. This guy exited a huge, maybe like, what is this, like 68 to 64. That's got to be at least like 6 to 7% of his position here. This guy trimmed off a whole third of his position. Levinson Roberts selling hard, bro. Levinson Roberts.